Bismillahirrahmanirrahim. Allahumma salli ala Muhammad. Welcome to the second part of our previous lecture with respect to the salary and allowances in business taxation. So, if you practice and learn this part, you will be able to score 10 marks in the exam. Remember, so 10 marks are important. So, learn this part and practice accordingly. I will try to summarize it and provide you more um, hints to solve the exam later on. So today we will discuss salary and other miscellaneous concepts. Remember, if reimbursement is given by the employer, if there is any reback of the payment, reimbursement of the payment, compensation paid by the employer on any um, prepayment done by the employee, then how that reimbursement is treated. So if reimbursement of the expenditure incurred in the performance of the official duties, so that does not constitute the salary, that is not added in the salary. And if reimbursement of the expenditure not incurred in the performance of the official duties, so these are the other than the official duties, then the treatment will be different and they will be added in the tax. So it is taxable except the medical expenditures. So medical expenditure is basically, if that is part of the employment contract, then that is exempted. And if medical expenditure is not part of the contract of the employment, then it is fully taxable and will be added in the income from the salary of the employee. After reimbursement, leave fare assistance. Sometimes employer provides some hotel facilities to the employee to refresh them, and they send them on vacations so that they could become more motivated to work for the employer's wealth maximization. So that is basically the leave fare assistance. So that is fully taxable, will be added in the income of the employee. Consideration for the employment agreement. If any payment is given to the employee to join that particular institution, that payment will be added in the income of them. Consideration of for condition of employment. If there is any condition with respect to the employment and to accept that condition, employee is given any amount, so that amount will be added in the salary of the employee and will be taxable basically. And next one is the consideration for a change in condition of employment. If employer want to change any condition of the employment and want to motivate the employee and give him any amount in that consideration, that is basically a taxable uh, consideration. Uh, Consideration for restrictive covenant. Restrictive covenants. Covenants are the restrictions basically. So if any restriction is imposed on the employment, for example, if employee say that no employee will disclose any secret information with respect to the business, and for this purpose, employees will be compensated. So that compensation will be treated as a taxable income, will be added in salary. Leave cash encashment facility is also provided to the employees. एम्प्लॉयज़ को हर साल जो छुट्टियां अलाउ होती हैं उनके अगेंस्ट जो छुट्टियां बच जाती हैं तो वो उनको इनकैश करवा सकते हैं. सो इनकैशमेंट ऑफ द रिमेनिंग लीव at the end of the year or a specific term, that compensation, that encashment is treated. If that is provided by the government, that is exempted with respect to the retirement. And if that is provided during the services before the retirement, that is taxable. So this is a very basic example. You can practice this to calculate the total income of the employee. Next one is termination benefit. So termination benefits in any form will be basically taxable. Whatever name you can give them, that is taxable. Compensation for redundancy. If business is going to close any part of the business or the whole business and compensation is paid to the employee, so that compensation is taxable, will be added in the income under the head of the salary. Golden shake and sometime employer offer to their uh, employees near to retirement to get the retirement before the uh, termination of the employment. So a lump sum amount is paid to the employees. That lump sum amount is basically taxable. And that will be taxable in two ways, either under the head of the salary or it can be added in another block of the income other than the salary. So for that purpose, we need to calculate average rate of tax of the last 3 years. If that is given, so employee has a choice whether he wants to add that lump sum amount. For example, golden shake hand amount is received by the employee during the year. So basic income plus that, if that is not added in the basic salary, it means employee basically considers that golden shake hand amount as a separate block and it will be added in other income of the employee. In second solution, that can be added in the uh, salary under the head of the salary, basically. So golden shake hand. So next section basically talks about the retirement benefits. The first retirement benefit is the gratuity, basically any lump sum amount paid by the employer to the employee at the time of retirement. So if that gratuity is paid by the government, federal, provincial, or the local government, then sorry, that is exempted. For example, here you can see 250,000 is paid as a gratuity to the employee by the government. That is exempted, will not be added. If that is given by the gratuity is approved by the CIR, that is also fully exempted, will not be added in the total income. And if that gratuity fund is approved by the FBR, in case of FBR, that is exempted up to 300,000. For example, if 350,000 amount is paid, uh, so amount greater than 300 will be added in the income like this one. So 50,000 will be added in the salary income. And if that gratuity or fund is unapproved, unrecognized, then treatment will be different one. And this is the treatment. So 50% of the gratuity amount or 75,000, whichever is lower, will be added for the computation of the income. For example, if you look at this example, basic salary and 250,000 is the amount of the gratuity, but the gratuity is unrecognized. So how we will take 75,000 as compared to 50% of the gratuity amount. So 50% is 125,000. So whichever is lower, 75,000 is lower, will be taken here and the difference will be taken and added in the computation of the total income, 175,000. Next part is pension. So pension is basically provided to the employees on periodic basis, on monthly basis, quarterly basis. Most of the time it is monthly basis. So the tax treatment for the pension is fully exempted irrespective of the age limit, subject to the two conditions. So pension will be paid to the employees until employee is re-employed by the same employer or the associate of the employer. Or if employee is going to receive two pensions, then the higher one will be exempted from the tax purpose. Commutation of pension. Commutation of pension. So the employee who is going to receive the pension, he can sell his pension rights to any employer and can receive a lump sum amount against that pension amount, right? So pension is a periodic amount which employee will receive over the period till his death or based upon the condition. So employee can sell his periodic pension to any employer, or any person, or any investor and can receive lump sum against that periodic pension. So tax treatment of this commutation of the pension is same like the gratuity. Gratuity given by the, if it is given by the government, it is fully exempted. It is proved by the CIR, it is exempted. If, sorry, if it is approved by the FBR, it is exempted up to 300,000. And if it is not approved by any competent authority, then 75,000 or 50% of whichever is less will be treated as a calculation. Provident fund. So if employer wants to give any welfare benefit for the betterment of the employee, then for the welfare of the employee, a provident fund is created in which a contribution is provided by the employee from his salary, and contribution of the employer, generally it is equal to the contribution of the employee. यानी कि जितना एम्प्लॉय की सैलरी में से डिडक्ट होगा उतना ही एम्प्लॉयर कंट्रीब्यूट करेगा. फिर है इंटरेस्ट क्रेडिटेड ऑन प्रोविडेंट फंड. वो जो प्रोविडेंट फंड क्रिएट किया गया है उसको कहीं पे इन्वेस्ट किया गया है, उस इन्वेस्टमेंट पे जो इंटरेस्ट अर्न किया गया है, दैट इंटरेस्ट इनकम basically is credited to the employee's account. Third head. Now fourth head is payment of accumulated balance of provident fund. Now a payment, if a payment or lump sum amount is paid to the employee by the employer against the total contribution contributed by the employer and the interest on that contribution, that lump sum amount is the payment of the accumulated balance of provided fund. So these four heads will be considered for the calculation of the provident fund. Four heads. Remember these four heads. Now for taxation purposes, if that provident fund is created by the government, then what will be the tax treatment? If that provident fund is approved by the CIR, or if that provident fund is unrecognized. So there will be three cases. If that provident fund is created by the government employees, then employee contribution is taxable, but there will be no treatment. Taxable, but there will be no treatment. Reason is that contribution is of the employee is already included in the salary calculation. So there will be no additional calculation of the employee contribution. Then if employer's contribution, which is equal to the employee, that is exempted in case of government, interest on the investment of that contribution is also exempted, and payment or lump sum payment against the accumulated balance, that is also exempted. Example is here. So contribution or the income on that contribution is not added in the computation of the total income. Second case is So if that provident fund is approved by the CIR, Commissioner on Inland Revenue, so what will be done with respect to the employee contribution? No separate treatment will be done for employees. Employer contribution 1/10 of the salary or 150,000, whichever is lower, is basically taken as a taxable part. And interest credited during the year, the income earned on that contribution is basically taken as 1/3 of the salary, or a rate is basically applied. For example, 12.4% is applied on it. Remember, this is or. For example, let's take the example. Here's one where the amount commuted with 12.4% on the balance of employee exceeds 1/3 of the salary of an employee, right? Exceeds 1/3. Case number 2 is where the interest rate applied on balance is higher than 12%. So let's calculate the taxable income based upon these cases. Example is data is given. 300,000 is the basic salary, 30,000 is the dearness allowance, and then employee contribution, and employer contribution is equal to the employee. Interest credited at the rate of 15%, 35,000, compute total income. So 300,000, 30,000, this becomes the salary income. Then 60,000 employer contribution, which was equal to the employee contribution, less 1/10 of the salary, 1/10. So we'll take 1/10 of the 330,000, that is 33,000, or 150,000, which was given as a condition. So whichever is less. So 33,000 is less than the 150,000. It will be further treated. And the difference of this one contribution, employer contribution, and the exempted part, difference is included in the taxable income. Now, with respect to the interest, there are two cases. 1/3 of the salary. So let's take the 1/3, that is 110,000. Since it is higher than the amount of the interest credited, that is 35,000, interest is not taxable. Nothing will be added. Case number 2, fixed rate of interest is 12.54%, and actual rate of return is 15%, which was earned 15%. So take the difference, which is 2.6%. So 2.6% over 15% multiplied by 35,000 will be added in the taxable income. So total income of the employee will be 363,000. So this was the case of Provident Fund approved by the CIR. If Provident Fund is approved by the, sorry, if it is unrecognized or unapproved, then no treatment for the employee contribution, no treatment for the employer contribution, no treatment for the interest credited during the year, and shall be only payment of accumulated balance shall be considered for the taxable purposes. Here you can see in the example, nothing was added in the total taxable income. This was the part of the Provident Fund. Next section, which will be the last section, uh, Computation of tax liability. When we, so far we have calculated total income of the employee, total taxable income. Now here this section will treat the how can we calculate tax liability, tax payable of the employee. In this way, in the calculation of the computation of the tax liability, we will treat deductible allowances. For example, if zakat is paid by the employee, that will be deducted from the taxable income first. Children educational expenses paid by the employee, those educational expenses will be deducted from the taxable income of the employee based upon this one. So we will see the example 5%, 25%, or any amount in the C section. How? Example, no, this one. Let's say the total income of the employee is 900,000. Zakat is 100,000. Education expenses of two children is 100,000. No, the calculation is from 900,000, we will directly exempt 100,000. So from the total income of 900,000, 100,000 will be deducted. And with respect to the educational expenses, we will apply this methodology. We will take 5% of the tuition fee, that is 5,000. Then 25% of taxable income, that is 225,000. Then there are two children, multiplied by 60,000, amount is 120,000. So by comparing these three amounts, whichever is the less one of these three, so that is the 5,000 rupees. So that 5,000 rupees will be deducted from the taxable income. So 100,000 zakat and 5,000 educational allowance will be deducted from the taxable. Now the taxable income will be 795,000 instead of 900,000. तो 9 लाख की बजाय ये हो जाएगी 7,95,000. Salaried individual. If you are salaried individual, and salaried individual is a person who basically receive at least 70% of his total taxable income from the salary. For example, these are the heads of the salaries. So employee is receiving 80% of total income from the salary. It means he is a salaried person. On salaried individual, to calculate his tax liability, we will apply this slab rate table. So rates of the tax for the salaried individuals are given in this hierarchy. For example, if your income is 600,000, there is zero tax. If your income is greater than 600,000 but less than 1.2 million, so 2.5% of the difference amount will be taken. And gradually it will be increased further as your income increases. Let's take the example. If your income is 600,000, zero tax. If your income is 1 million, then let's see the slab rate, 1 million. So in 1 million, you basically lie here, 1 million. So 1 million minus 600,000, 400,000 रुपीज, 4 लाख बन जाएगा जो डिफरेंस है. तो इस 4 लाख पे आप अप्लाई करेंगे 2.5%. So 2.5% of 400,000 will be equal to the 10,000 rupees, and This 10,000 is your tax liability for the year. Another example is given here. If your income is, if your taxable income is 2.6 million, then your tax liability will be this one. 165,000 tax on 2.4 million, and then a percentage will be applied. So your total taxable tax liability which you have to pay is 210,000. So by applying the tax rates given in the above table, you can calculate the tax liability of the taxpayer. And last part is, if you are a full-time teacher, like this is a person who is a full-time teacher. If you're a full-time teacher, your tax liability will be decreased by 25%. 25%. For example, if your tax liability is 65,000 gross tax which you have to pay, and you are a full-time teacher, so your tax liability will be reduced by this amount, 6,875, because see, your income income from salary is 1.3 million. If you apply tax rate on 1.3 million, right? So tax on 1.2 million is fixed at 15,000, and on the remaining amount, you will be calculated, you will calculate your tax at the rate of 12.5%. So 12.5% आप इस पे अप्लाई करेंगे तो आपके टैक्स जो है इस रिमेनिंग अमाउंट पे 1 लाख पे 12,500 हो जाएगा, एंड योर टोटल जो टैक्स है बेसिकली वो 27,500। अब ये जो 27,500 है बेसिकली, इस पे आप 25% एडजस्ट करेंगे एज अ टीचर, विच इज 6,875। सो 608,075 जो है will be deducted from the gross tax. And your tax liability for the year is 58,125. So this was all about with respect to the salary and their tax liability. So up till now, you must be able to calculate the total income from the salary, taxable income after applying all the adjustments with respect to these allowances, perquisites and other elements, deductible allowances, and then apply the slab rates of the tax on the salaried individuals, and then calculate the tax of the employee. So after calculation of tax liability, you have to consider if that person is a teacher, then 25% adjustment will be done on it. So I hope that from this lecture, you will be able to calculate the taxable income and tax liability of the employee, and will be able to score all the marks designated to the numerical given in this section. Moreover, if you have any ambiguity or question with respect to any treatment given in this section, you can contact me anytime. Wish you all the best. Allah Pak bless you in the month of Ramzan and bless you with good marks in the exam. Thank you so much. Assalamu alaikum wa rahmatullahi wa barakatuh.